Thank you so much for the opportunity to present today. This is at CoBank, something that I must tell you really love to do. Whenever a new idea for a report comes up, you spend a lot of time talking about it and thinking about it, researching, talking with people in the industry, and then trying to develop what we call a research edge, and an angle or something interesting, not just for the sake of being provocative, but rather something useful that can actually be taken away for clients to think about and hopefully be inspired by. I will tell you, I'm very inspired by the U.S. farmer. This has not been an easy few years. And just the nature of this presentation, I'll tell you a little bit more about myself, preview the report, offer some thoughts and ideas, and then we'll come back to questions, answers, and responses. I'll say questions, answers, and include responses because folks in the audience probably have a considerable amount more of direct ag experience than I do. So I always like to learn, and by all means, what I think is not the only opinion out there. So with that, let's get right into it. So we have a little bit of a lag. Let me just see. About me. So as Gary said, I'm probably not your typical ag economist. So I spent, I don't even want to admit this, but it's year 33 since I graduated undergrad, and I spent a good bit of that career as a institutionally trained investment analyst, hedge fund manager, and strategist. Before CoBank, I was a sector manager at Wells Fargo, focused on packaged food. Prior to that, I was an executive director at Rabobank, the Dutch bank, focused on the industries that we're talking about today. My career started actually in the insurance industry, then Wall Street, and then in 2003, I created a research and consulting boutique that focused on-demand work, research work, expert witness work surrounding the financial crisis. I'm happy to talk about that offline. And the way I really came to ag was I saw in 2002, 2003, a number of the life insurance companies demutualizing, meaning coming public. And as I researched them, they had a huge balance sheet item called farmland and ag exposure, direct lending and farmland real estate. So that's where the journey began, and here we are today. So as people might be able to see, and Gary, I didn't bring any props with me, but I'll just do a little flash here to the back where you could see the baseball poster. I worked for the Montreal Expos when I was 18. And I thought I was going to be an athletic trainer. No money in it until you get to the pros. But nonetheless, I always like to think about, the lessons I learned both in sports, and whenever I do a report, I either like to have a sports theme or a rock and roll theme, but in sports, I'm usually baseball. However, this is a basketball coach who I think many of us know, and setting the stage here, John Wooden, would say failure isn't fatal, but failing to change is, or might be. So let's think about that as we open our mind to the current state of the farm supply co-op business and where we're going. So Field of Agronomic Dreams, this comes into the baseball reference. Love that movie. What could be better? Iowa cornfield and baseball. So if you build it, they will come. I guess the theme is, for me in this industry, we have a terrific, long, proud history of farm input and farm supply co-op serving the farmer. As we think about ag retail, farm supply, the sector has been dominant, right? It's 30% before Growmark and CHS. You add that together, it's close to 40% of the market share. We've had independent ag retailers over time, have a bigger piece of the pie. We've had Nutrien, the public company from Canada, come in and sort of disrupt and reinvent certain parts of ag retail. They're doing wonderful things, but as some folk that I'm close to in the rural communities tell me, they're not open Saturday. So that's a little strange, I guess, in farming when you need supplies and inputs. But nonetheless, the good news is that farm supply co-ops remain very important in the system, but there is competition. If we take, as we go on our journey, I'd like to look back a little bit and then look forward. So as we look back, the past decade, this should not be a surprise to most folk that there's been a consolidation, a trimming, a contraction in the number of farm supply co-ops and total co-ops. Again, not a shocker. I think it's just important, though, when we think about where things are going, during difficult periods, consolidation is natural, if not defensive. But even as we headed into the super cycle, which peaked in 2012, we did see the number of co-ops sort of contracting. So I think that's an important data point. Next thing to look at is input sales over the past decade. I apologize, the data here that I got from USDA both ended in 2018, but I think the trends have been largely the same. As everyone in the room knows, crop prices peaked as we got to 2013. The fertilizer and chemical sales and seed were still very strong in 14, but that was the beginning of a contraction. Just on the nominal basis, FERT over a decade has been flat. Crop protection is flat to down 0.4%. Crop protection has been up a little bit above 1. Seed has been up on a compound annual growth rate 4%. I'm guided by something to mention that with respect to ag retail and making money on fertilizer, the prices of fertilizer came down quite a bit during 15, 16, and 17, and they're even low now. So that factors into some of the growth rate numbers since it is in absolute dollars. But I think what's important is that you have had farm income under pressure, working capital under pressure, and the ability for co-ops to sort of make carry on the fertilizer, buying in the summer and selling higher in the fall or the spring. That dynamic has not been as robust. So if we think about the competitive position, I like to utilize an analytical framework pioneered by Michael Porter of Harvard. And this is sort of the 5 competitive forces and how they apply to this particular segment. As you can see, and I'll distribute these slides after so we don't have to go into too much detail, but the 2 areas where the risk level is extremely high is competition and rivalries among existing players and the power of suppliers. Let me explain. So I think we all would agree that the co-op has historically added tremendous value to members through local knowledge and expertise and a loyal customer base. However, as farmers get under pressure, it causes growers to reevaluate where they buy, how they buy, what they buy, and through which channel. There are a few newer enterprises, ag tech startups that have come onto the scene. That's under the threat of new entrants. And the interesting thing is they've made some headway, but they haven't made a tremendous amount yet. What I think is the greater threat, though, comes down to the input suppliers. So today we had, call it 5 very, very large players. The farm input business had already consolidated, but then with industry pressures, we saw Bayer, Monsanto coming together, Dow, DuPont, ChemChina bought Syngenta, and Agrium and Potash Corp came together. That was different. That was a retailer buying a potash manufacturer on the cheap, becoming a vertically integrated enterprise. That is instructive to where I think ag retail is going. But in terms of the power of suppliers, I mean, I feel the obligation to make mention that most of these are public companies, the margins are slim, and every other industry has direct to consumer selling. So we can sit here and say it's never going to happen, in farming, but I don't believe that. You can design your own John Deere tractor on the computer and then go to a dealer to buy it. But maybe in the future, if you're big enough, you just buy it from Deere. And why couldn't that be the case with FERT Chem seed? It could, it might. I worry about that. It happens, or at least the thinking is that as farmers get bigger, as they have a holding company structure where they have, significant capital, significant land, they have, as we all know, increased buying power. That's where they might leverage their size for better pricing. And if they leave the co-op and negotiate directly with the input manufacturers, herein lies the problem. So my point is not to scare anybody, and I'm not telling this crowd anything that you don't know already, but what I learned early on in life is that you have to embrace the things that scare you so you understand what it is you're up against and then have a strategy to overcome that. Which leads us to the path forward. So when you think about the thesis in the report, farmers and supply cooperatives serving them have had 7 difficult years of profit, cash flow, and working capital pressures. I put the asterisk there along with the next paragraph because the culprit has been low commodity prices, competition with other regions, tariffs, weather volatility, only modest population growth, and changing consumer preferences. The asterisk goes there because here we are and we're seeing a lift in commodity prices. You had 7 lean years, the biblical 7 lean years. You've had 5 events, fires, hurricanes, floods, fire in Siberia, a pandemic. These are sort of biblical plagues. We've had an unbelievable shock to the system. The interesting news is that the U.S. farmer has hung in there, and we are seeing demand for our product. We're seeing exports. We're seeing some pressure in other growing regions. But please, let's not confuse the fact that we just went through 7 difficult years, and that's happened before. Let's not confuse the fact that the challenges that were here before COVID, many of them will continue. And I'm very, very happy that we have a temporary rise, and we all should feel good. But the counter or the cyclical nature of this business can be very scary. And what I was mentioning before is that farmers are becoming more, they're becoming larger, more sophisticated, and they're looking for tech innovation to help lower their cost of production. That's very critical. They are looking for technology and innovation, and rightly so. They don't trust everyone coming out of Silicon Valley, and rightly so. A lot of those ag tech products haven't worked yet. So what does this mean? The time to evaluate new ideas and act is now. So what do? I was talking to Mike Minahan earlier, and we got on the conversation about, okay, so it's great. What do you actually do? And Ken, when he asked me, when I sit with boards, what do I say? Well, in everything I do, I sort of have my own owner's manual. And I think if I could humbly submit, create an owner's manual for your co-op, a new one though, follow it and revise it when necessary. And we may have to revise it when necessary now. In terms of the left side, this is philosophical. Shift to a growth mindset from a fixed mindset, meaning think differently, listen to your kids, look all around you. Don't ask why. It's a human nature. When something new comes to us, we ask why. Ask why not, okay? Be willing to speak about the unspeakable. I can tell you some stories about that, but essentially it's thinking about the elephant in the room that everyone knows, whatever that elephant is, but no one wants to talk about it. You know what? Close the boardroom doors, lock them, agree that everyone will be friends after, and just talk about it. Engage in that honest dialogue, embrace diverse views, commit to a process, and real strategic planning. Real strategic planning should be where you bring in some outside voices, perhaps CoBank, perhaps other bankers, perhaps motivational speakers, perhaps somebody from a different industry that failed and then created a $5 billion company. Learn from past mistakes. And the most important thing is do not repeat them. So this gets to again, a little bit of my own philosophy in life. My number one rule in business, which I learned from investing, is when riding a dead horse, the best strategy is to dismount. Okay, that means cut your losses and think differently and be willing to rethink your strategy. So I'm going to share sort of 5 recommendations. If you love them, I'll accept a thank you. If you don't love them, blame Gary. He made me do it. I'm just kidding. What I'm going to do here is I'm going to bring a little bit of me into how I think about the world. So I apologize in advance if it's a little edgy, but I think you'll like it. So the first is you have to ask the hard questions. Does your business model defend the past or does it embrace the future? So this table, this chart that is from CB Insights shows 100+ technology companies changing the farm. I can honestly tell you, I think I've met 90 of these companies. I've certainly looked at the business plan of 90. And of these, there's maybe 3 on a good day or 4 that I would invest in personally. But that being said, there's billions upon billions of dollars coming into this industry. And when Yara bought a company called Adaptin, fair disclosure, I was on the board, they bought it because they had a product that actually helped monitor nitrogen deficiencies and redundancies on the field. Excellent product. Interesting that a fertilizer company would do that. Obviously, they're hoping that the signals are more deficiency than redundancy, but still, they know where the business is going and they took a shot. I think that's going to happen over time. The second recommendation is follow good advice. So the best way to fall behind is to actually stand still in a rapidly changing world. This quote is from Lauren Bacall, the actress from many years ago. The third idea, or the third recommendation, is review your strategic options. And in the report, we talk about this. There's 3 that we point to. And the first is, the basics, the low-hanging fruit, operational excellence, rationalize your business assets and locations, invest in automation and efficiency. Second is joint ventures. Speaking to some clients and bankers this week, I learned that we have, we might have some logistical bottlenecks coming up here with all this grain demand overseas. If you don't have the right infrastructure or transportation assets, well, in the spirit of collaboration and cooperation, partner with others. So many people in this business want to merge the co-ops together. 1 + 1 does not always equal 2. And by the way, it's often much better to have a joint venture before engaging in a merger. It's an old-fashioned way to think about it, but usually don't get married without a period of engagement. Think about that here. And then finally, ag technology and innovation. You can tell I'm on this kick, so I'll just elaborate a little bit. So instead of just buying an ag tech company or investing, think about first aligning or acquiring the technologies, or acquiring by way of purchasing the technologies, field testing it, see if it actually works. And if so, if the farmer is interested in this, but he and she don't have the party to translate the complicated technology to actual field recommendations that help the farmer, I believe the farm supply co-op is in a wonderful golden opportunity for them to add value. So when I meet with ag tech companies, and again, I spent many years investing, so people still call me with investment pitches. I usually start with, well, what's your go-to-market strategy? Well, we haven't thought about that. And then I say to them, okay, so you have this great technology. You don't even have the right to be on a field discussing this yet because you haven't earned the farmer's trust and you haven't built, that relationship. So, you don't have a go-to-market strategy. That's a problem. If you have an agronomist on staff, if you have a view of the market, if you're looking to develop, develop a business, you have to add value. And you have to add value by having the relationship and proving that your product is there. I think this disconnect provides a great opportunity for the co-op to come in and vet the technology and actually help translate it to the ultimate user, the farmer. Become a customer champion. In the context of asking why versus why not, I decided to get a general management. I went back to school, in essence, a few years ago, and pursued the Wharton General Management program. It had been a long time since undergrad, and I wanted to understand how the best in the business are sort of thinking about strategy. This book by two professors that presented in my course, Connected Strategy, is excellent. It's about building continuous customer relationships for competitive advantage. If you're in a commodity business like agriculture, lots of parts of ag is, you have to differentiate by service, you have to differentiate by service and price, but it's also about understanding and being forward-looking about customer needs and how things are changing. Great book, read it. And then finally, the final slide is, there's an interesting story about a camera company back in the 70s that had 85 to 90% share of the film and camera market, and that was Kodak. Kodak actually had the guy on staff that created the digital camera. And the digital camera actually went to space. I researched it and validated that. It went to space, and Kodak said, you know what, this is cool, but we're going to only make digital copiers. We're not going to make digital cameras. And digital cameras took off to the point where it ultimately put Kodak out of business. So the important thing here is to take a look at what really happened. What happened in a nutshell is that they were unwilling to cannibalize their existing business, even though other parties were waiting, chomping at the bit to take them to the cleaners. They were unwilling to change. They had to think about this bridge of transitioning to a new product while maintaining their customers and helping their customers transition. That was a fatal flaw because the customers went there anyway. There's another case study, which I don't have here on the deck, but it's Blockbuster Video and Netflix. Blockbuster Video was basically put out of business when Netflix grew in market share and streaming came, and the idea of renting a video or a compact DVD at a video store, became passé. So my guidance and the thought I want to leave you with here is those that forget the lessons of the past are condemned to repeat them. Let's not do this in agriculture. The writing is on the wall that the customer is changing because the consumer is changing. There's new ways of selling, there's new ways of servicing, and my recommendation is let's use what we've learned in other industries to rethink the co-op business model to maintain the great loyalty and to add greater value to customers. So with that, thank you for listening. And I think I'm going to let Gary moderate the Q&A.
Thanks, Ken. That was great. Thanks for the insight on there. If anybody has any questions, feel free to unmute yourself and ask them, or you're welcome to type them in the chat section on there. I'll start off, Ken, with a question for you on here. So, in my area, I have a number of smaller co-ops, and they have expressed the desire that they really don't want to grow. So as far as some of the mergers and other things that some of the other co-ops are looking at, that's really not within their culture that they want to do. And I think that's great on there, but they still have the challenge, as everybody does, of staying viable. Do you have any thoughts on there for in this changing landscape that we have and all the challenges of how a co-op can continue if they want to stay relatively small or stay at least in their same trade area. How can they do that yet still, stay viable and relevant?
So, Garrett, the question then really is increasing bottom line profitability, right? Is that what I'm hearing? In other words, maybe there's not a view to expand into other regions, but to improve the bottom line. Is that sort of the nature of it?
Yeah, and again, it's not necessarily expanding the bottom line. It's just staying relevant on there. So as we go in there, there continues to be other competition and other co-ops coming in there, and even non-co-ops. It's just as we have this ever-changing dynamic, on there. If a co-op's not necessarily looking, that they don't necessarily want to do a joint venture, which would be in a sense of growth. They're not necessarily looking at merger type things on there. Are there any other types of things that maybe they can look at to do to still, in a sense, show that they're bringing value to their customers? Because some of these, because members, at the end of the day, they like, some of them like the small feel of the co-op where they know everybody, but they still want, as much as the resources they can of the larger co-op if possible on there. And so I just didn't know if you had any thoughts about being able to accomplish both those.
Yeah. So no, thanks for the background clarification. So let me share an analogy and then we'll drill in. So an uncle of mine had lost his job in the 60s and bought a laundromat. And as ironic as this is, my dad was a professional photographer. So the Kodak lesson is actually very dear to home. But my Uncle Marvin had a laundromat, and he was very successful because there was demand for the laundromat. And there was so much demand that another store opened up 3 stores away, and he opened another one. And then he had the benefit of 2 laundromats and 1 shopping center with a very good Knish place in the middle, I remember, in Irvington, New Jersey. And the issue was that he stayed relevant to customers because the store was always clean. And if people lost money in the machines, because in those days it was change going into the vending machines, he refunded their money, no questions asked, thanked them for their business. And even though there were some cases where people might not have been terribly honest, in the long run, that was servicing the customer in the way they wanted, in a marketplace that they wanted, in a manner of engagement they wanted. The other thing that helped is if anybody wants to own a laundromat, make sure it's near a supermarket, because those two tend to go hand in hand. So with the co-op, and using the analogy, let's think about what remains critical. So what I think won't change is tremendous customer service, loyalty, a sense of belonging. And if you could provide other products that could be useful underneath the banner of the co-op to make it more relevant, wouldn't that be a great idea? So one of our managers who's in the corporate agribusiness group at CoBank had said to me, "Gee, Ken, what about, the quote unquote food deserts, the inability for people to buy food, good food, healthy food at the right price in the country?" I started thinking about that. And, military bases years ago, and I guess they still do, have the commissary where, you have food, you have clothing, you have, I imagine they have, video games for kids or what have you, and other products. So why can't you think holistically about, what's missing in this community, and maybe adding products and services that are complementary to just living? Maybe that's an interesting idea. Another, again, thinking through this a little bit is if you want your community to be vibrant, whether you're a big or a small co-op, vibrant means making sure that there are enough jobs and interesting work for people to come back to the community. So I think there's a hidden story here where you don't have to be in New York City or Silicon Valley or Geneva or Paris to be a very successful data technologist or data scientist. And if we know the world has moved towards technology innovation, why couldn't you bring back that discipline to a local co-op? I really think that, the key to this may be hiring 2 or 3 young people to come in to look at the situation and say, you know what, here's where it's going. We're not looking to displace work. We're actually looking to modernize what we deliver. And by the way, if the farm is turning over to the next generation that is very tech savvy, how can you not be engaged there? So, Garrett, I know I've gone on a path here a little bit, but I go back to sort of what's the big picture and what are you trying to do? And it doesn't have to be many radical moves, big merger or sale, or buying something that you have no business owning. It may be understanding, okay, what are we trying to do here in the local community, and can we do some experiments that are reasonably inexpensive to give it a shot? I hope that's helpful. That's kind of the way I think about it.
It does, and it's funny because I talk to a lot of clients, and this, it's an ag issue, but it's really just it's just reality in the world we live in right now. There's so much data and information out there, and one of the biggest challenges with a lot of my clients is, how do you mine all that data? How do you get that into stuff that's useful? And you raise a great point that the ability to do that, whether you're a large co-op or a small co-op, is going to really provide a lot of benefits. So I appreciate that insight.
I'll just add one thing, and then please ask questions. I can only see maybe 16 or 15 people, and I can call you out by name if you don't ask questions. But let me also tell you something that's very interesting. I see you smiling, Tom, Burley, so I'll throw this your way. Billions upon billions of dollars going into ag tech, and yours truly was on record after Monsanto saying that was a mistake. You bought the wrong company at the wrong time, at the wrong valuation. And everyone's running around saying big data this, big data that. You know what? It's actually small data. It's the right amount of data. It's like a funnel, getting a lot of data down to, the 5 things that matter on anything you do, whether it's stock investing, whether it's soybean growing, whether it's a restaurant recommendation, or whether it's a laundromat like Uncle Marvin, right? He had 5 things. It had to be near a supermarket. It had to be clean. It had to be in a neighborhood where people didn't own a lot of washing machines. You had to have the right amount of customers that were willing to walk to your place if they didn't have a car. And the 5th thing was, if your equipment was broke, you had to fix it. So that was 5 things. That's kind of how I look at life. So with that, I'll go back to allowing people to ask a question.
Well, Ken, before you call me out, I'll piggyback on Gary's question. I think it's related and pretty relevant to what you're talking about. And this is better than I do, that, the agricultural landscape continues to change to where we have, so many small farmers and hobby farmers and lifestyle farms. And then we have the big ones that are ever getting bigger, and their needs tend to be differentiated. And, Gary, when he was asking his question about the co-op that wants to remain the same, I think you bridged that pretty well, because my first thought was, well, you have to cater to these small guys and live off of that, because the other guys are going to bypass you. So, but to bring it back to the co-ops world, and this is not an easy question, but can either small, medium, large, whatever co-op, can they do both? Can they somehow be involved in the kind of direct to the large farm from the bayers and so forth direct, and yet still serve the small and mediums with the distribution and the warehouses and so forth? Yeah,
well, I'll tell you, it's interesting. I guess the answer is it probably depends, right? It depends on where you are and what the makeup is. Some of the not so good news about serving a lot of small stakeholders is that the costs for doing that can be exorbitant. And, what I always try to tell venture capitalists and the companies they invest in, if they don't get this point, I kind of have to do a scared straight with them, which is that if you're in a business and the net present value of the customer relationship is here, think about developing all your customers and then bringing it down to a net present value, but the cost of maintaining is here. That's not really a business. That's an inferno. It burns cash all the time. So that would be something I'd be a little cautious of. That being said, Home Depot has a contractor's business and they also have a retail business. And, what I think is interesting about that is maybe the retail business is analogous to the, hobby farmers, and maybe the contractor, the Home Depot Pro, would be the more professional farmers. I think it's interesting. I think it's, the mind, the only limitations is what's in your mind, right? So I think that in a given region, you might have that ability. You need to be yourself, though, a ruthless expense maven. And I think you probably have to buy, your products for resale real cheap. But look, I think that it's worth exploring. And I think that these are the kind of questions that cooperatives of all sizes should ask. And by the way, maybe there's a large cooperative in one part of the world one part of the country that has an affinity to a smaller cooperative that does something else that they don't. So, that could be an alignment without necessarily a merger or a sale.
Yeah. Yeah. Well, I like your comment, or you and Gary together were making about the huge quantities of data that are generated by the machines we have now and drones and all the numbers that can be brought. But somebody, has to kind of condense that to those 5 things that really count and so forth. And I think in our thoughts at the university and in our ag engineering department, that co-ops are well positioned to do that because of the trust factor and kind of maintaining the ownership of that data.
Tom, it's an excellent point. So, again, I sat in Monsanto's boardroom and I said, I have protection if you get mad, but yeah, you have to hear this, that nobody is going to do business with you the way you think it is if you own the data and you're selling the inputs. It's analogous to when I was a partner in a hedge fund, and we had a prime brokerage relationship with Goldman Sachs and another party. And that party would get to see our positions at the end of each day. Don't you think there's a conflict of interest? They're looking at our positions, they're providing the flow service, and they're a heck of a lot bigger. So I used that example and they didn't like it, but they appreciated that I told them the truth. And that's kind of me. I think that with all these ag tech companies, a lot of times what they're missing is the most important ingredient. So you can get 90% of the way there, but if you can't have that level of trust, you can't have that repeatability. And I do think we're at a moment in time here where what the co-ops have is still that relationship. And I think we should celebrate it. I think we should act. I think every board of customer of CoBank and even non-customers of CoBank need to look at this period of COVID-19 and say, you know what? This is just the beginning of a lot of volatility in the world, because these weather patterns this is indisputable. So if it's going to get even more complicated, then let's think about how to reorient our business. So I would say, a phoenix, not a phoenix rising from the ashes, as much as being a very good risk manager and thinking about, wow, there's something that can help here. And instead of fighting it, let's see how it can benefit us. I'll just say that, when I was at Wells Fargo, it was a short period of time. I thought they had changed the way they were thinking. Unfortunately, they didn't. We said goodbye to each other. The problem with Charlie Scharf, and I worked with him many years ago at Smith Barney, is that if he still thinks the retail banking business is a growth business, he's dead, and they're dead. And I say that without any axe to grind, but just rather looking at the fact that you can transfer money here, and you can do digital banking everywhere with almost every company. And before COVID, people weren't going into the branches much. Post-COVID or during COVID, they're not going into the bank. So if you don't look at that and say, wow, stuff is different now, then I think it can be challenging.
Very good. And it just seems to accelerate it. It just pushed the accelerator down, this rate of change as to how quickly that transformation in banking and a number of other things. And I think it applies to the co-ops world that we're speaking about today. I'm sure others have comments or questions.
Ken, I've got a question for you, more of a culture question more than anything. I think you did a great job giving some strategic recommendations, and you even had a 5-step process, right, for how you go through some of this. But for when I talk to folks, sometimes the challenge is kind of getting the culture there and getting buy-in, whether that's at the boardroom level or the management level, right? And I think number one on your recommendations is ask hard questions. Well, it can't just be the board chair asking hard questions, right? And then get crickets in the boardroom, right? You almost have to have buy-in from everybody that's involved. So just curious, maybe you could talk about that and how you kind of facilitate the culture, because like any industry changes, kind of like Tom's saying, in hindsight, it seems fast, but really when we're going through it, it's slow. It takes time for these changes to occur, but then at the same time, you can almost feel blindsided by them if you don't take any action, right? It's kind of counterintuitive. So
yeah, Mike, let me happy to give you my thoughts. The first thing that I would just say, in my opinion, the rate of change the rate of change is quicker now in the past 5 years than the previous 10. And the previous 10 were quicker than the previous 500 years. So the tech change is there, but the adoption remains very difficult. And there used to be an expression that, if you refuse to see the tea leaves changing, there's a book, Who Stole My Cheese? The person that was they were going back to the same spot every day thinking that, there'd be cheese, and there never was again. And that's where it becomes fatal. That's where, when, I wish I could interview the board of, the Blockbuster Video and say, what were you thinking, guys? And you could have bought this for $50 million. Today it's 215, 220 billion, but who's counting, right? Okay. So Mike, what do you do to get that buy-in? Or what do you do to get the culture thinking about it? The first thing is you have to sit with the board chair and get permission, and you have to position it like, do you want your legacy to be great, or do you want it to be a failure? Because there's enough out here that could cause the ship to go upside down. You don't believe me? Why don't you ask General Electric what they think of the world now? They used to be a dominant company. Ask AIG, the insurance company, who used to dominate their business. You can look at every large company and see that complacency created a real disaster. And you don't want to do that. If you get permission to have this discussion, you have to make it mandatory that everyone can speak the unspeakable without getting penalized. And by the way, we probably need to do that at CoBank as well. And I think we're moving towards that open discussion, because if you don't flush out the issues, then people never get the right information to the leadership because they're worried about it. So you almost have to get a buy-in to engage in a process that's open and honest, where I wouldn't say no idea is a bad idea, because there's plenty of bad ideas, but people have the right and should have the ability to at least express and explore in a safe way. And I must tell you, when big companies bring in McKinsey to evaluate a situation that might be just the situation that the board wants to look at, or direction to go, that's not a good idea either. It's good to get get 3 opinions about what's happening, and have that ability. Bringing in an outsider to discuss this, to unpack it, I think that's interesting. And I think with respect to the group here, I think this council has a great opportunity to share knowledge, share ideas, and be able to provide resources to at least just explore. And I don't, I always tell companies, I would never tell you what to do in your business, how to run your business. But what I can provide is a way to think a little bit differently, so that you're managing risk. And if you're managing risk, I think you're, by definition, enhancing return at the margin, no matter what. So, Mike, I hope that's a good way to think about it. It's a question of just starting with some conversations, and Yeah. Ryan, I didn't know if you had a follow-up.
I have a question that kind of goes in between what Gary said and then what Mike said. You mentioned at the end of kind of Gary's question how, bringing young people into the fold to, accept these technologies are going to be important. And I think going off of kind of as you were answering Mike's question and thinking about, asking about what kind of change needs to be implemented, going to board, how do you see, involving young people in these smaller cooperatives? In bigger cooperatives, we see, younger people being kind of drawn to, maybe just out of business school, maybe just out of, ag business, and they're ready to go into, a career at CHS or at Growmark. But how does a smaller farm supply co-op attract younger, members, board members, people to get involved?
Well, like anything else, I think that for a younger person, the first thing they're going to do is go to the website. And I'm not young anymore, but I go to a website and I look at when it was last updated. So if I see this great company and I go to the website and the bottom of the website says 2016, I'm like, oh my God. So you have to have your public presence there. And I think the interesting thing and the opportunity is that the folks in the boardroom, usually when you sit down and you get to know them, they have such wealth of information and knowledge that I like to celebrate that. I don't want, Gary, it was Gary's fault, but we had a meeting for 45 minutes that went 5 hours once. And I'll let Gary weigh in. But the way the board is thinking about things and thinking about that issue of succession and sustainability, that's where you can kind of change the brand, I think, to at least be relevant. And I think you have to involve tech and science together. So, I think a small cooperative having the ability to take the chance at just creating a brand that's relevant, that goes back to the Connected Strategy book that I recommended. And I think that, it all starts with conversations. And, so often we're fearful about bringing up something for the risk of getting shut down. But I think that if you have that ability to present with permission an idea or a way of thinking about something and moving that towards, what it means for the co-op staying relevant, that gets their attention. I would defer to others to know the individual company you're maybe a co-op you're talking about and what the best way to do it. But I think if you bring a gift up front in terms of what is the pain point? Well, staying relevant and staying thriving in the community.
There was no one particular kind of co-op I was talking about. It's more that you see millennials, which I'm just about to turn 25, but that's typically, an age 10 age year up. Whereas like our group and including myself until I kind of started where I'm at, didn't have as much familiarity with co-ops as that older group would have.
Yeah, well, it's interesting because co-ops are across many different industries. So they're not just, agriculture production per se. If you shop at REI, that's a co-op. I just ordered something from them. I got my dividend deducted. That was, that's like upfront patronage. You got to love it. There's a there is a method to the madness, and I think it's a good madness, all being told. But I think that idea of customer branding and being relevant and making it interesting and fun and cool at the same time. I think that there's enough data to show that you take a mission and a commitment to that mission and a track record to that mission, that's pretty strong. Patagonia, that's how they've sold a lot of product. And by the way, it's not cheap. I don't buy it because I love their mission, but until it's on sale, I'm not buying. But they get people to buy at a premium. So, these are lessons learned that from other industries that I think bringing to ag is possible, Ryan. And be a champion. I would say, the MAC has an opportunity also to, bring some of the smaller co-ops probably into a lot of cool things that are happening at OSU. So do it, who doesn't love going to college? Back to college.
Ryan, I'm going to jump in real quick too. It's just a thought on that from my experience working with the number of different co-ops on there. And I know particularly with the smaller co-ops, one of the challenges they have with millennials or younger people, whatever, is just like most people, when you start in a profession, you're looking at career path. Okay, where I'm starting, but where am I going to be? Where am I? 5 years, whatever, down the road. And one of the challenges with the small co-ops, there's only so many places you can go, and and in some cases it's until people retire or whatever, you're kind of stuck. And so that's the challenge. One of the things that I thought was extremely interesting was actually at a MAC meeting, a CFO meeting, I think a couple of years ago. There was a presenter there, and she was a recruiter/HR specialist. And one of the things that she brought out that I don't think enough of my co-ops I work with do is one thing we do at CoBank. Within CoBank, we've probably got 4 different levels of loan officers. I mean, you come in as an associate loan officer, then you're a loan officer, then you're a senior loan officer, then you're a lead loan officer. We call it relation manager. But they're stepping stones. And I think too many co-ops just have an agronomist or whatever on there. And even so, within that, one opportunity you have is start them as associate, give them some, things to be able to. You're still there's that feeling of advancing your career, even though it's essentially the same level. But there's also the fact that hey, you've got that additional expertise. You've got you've earned it. You've continued to improve on yourself, and so that was something that was really eye-opening to me, that even as a small co-op you can do is, don't be fixated on, within one certain job title, break those down and give them something to look for to progress their career. So.
I think we have time for one more question, and I'm going to open the floor to anyone who wants to jump in the chat box or unmute. One more question. I have one teed up that I think it's probably the obvious question today, but if we don't take the opportunity to think about it, I think we're missing a huge learning opportunity, which is you've shared that COVID has not been the cause of many of these trends that we're seeing, but it has exacerbated many of them, maybe sometimes provided relief even to some of these trends. But can you speak to any lessons that we can learn from COVID that apply to the strategies you're recommending for farm supply co-ops? I'm thinking about technological innovation and our problem-solving abilities and learning abilities, and just thinking, Ken, what do you think we should be taking away from this experience?
So, it's interesting. We had the financial crisis many years ago, and what some of the best investment managers that I worked with and listened to, people that were just very smart, that have built very large businesses, they used to say, what doesn't kill you, what killed you last time won't kill you this time or the next time, right? It's a perhaps a morbid way to think about it, but the black swan of the past, that doesn't come back, but there's a new one that comes. It always happens, or seems to. So I think having a comfort level with chaos and volatility is important. And but then there's something also that's interesting, is sometimes the best businesses are born during periods of disruption. And I think that there were a lot of people saying that COVID's going to happen, Tesla's going to be dead. No one's going to spend the money on electric cars. But Tesla's selling a lot of cars, and there's now a few new publicly traded companies that I think are selling electric trucks. Who would have thought electric trucks? So, especially in rural communities, right? But it's happening. So I think, Hannah, the way I would look at it is, I think being a student and looking at patterns, and also looking at the positive on, the recovery that's happened, but realizing that if you weren't positioned as your business to take advantage of the recovery, then this was a very, very expensive lesson. But those that were low-cost operators, those that had a staff that understood how to work together, I think those folks went and produced. And until we had the dry weather in August, this was going to be a gigantic crop. Ironically, if it was a big crop, we wouldn't have gotten the great prices that we have. So, you know, sometimes bad news can be good news. But I think being prepared, expecting the unexpected, being willing to operate without perfect certainty, because nothing is certain. And then also, I guess if there's a huge, huge lesson here is, you know, forget where you used to be on the climate change issue. It's happening. And the volatility and the fires in California and the fires in Australia are the worst we've had. And those things change weather patterns for years and years. So if you're in a business, i.e. farming, that is heavily dependent on weather, and you don't think that weather volatility is here to stay, that to me would be a very important lesson throughout the whole thing here. And although I don't know scientifically that climate change, you know, was a direct parallel with COVID, the reality is the ecosystems are, you know, pushing up against each other, and they're volatile. And I think that's going to be with us. So I think that would be something that I would really closely study from a go forward.
Thank you. Thanks for that. So that wraps up all of the time we have today, but I wanted to say thank you so much to Ken and Gary and Mike for joining us today, sharing your perspective, offering your expertise. Thanks to those who joined us today. On behalf of the Mid America Cooperative Council, we're glad to have this conversation, and watch for future conversations, and watch for a follow-up email from us with resources, ways to connect, and we hope to see you soon. Thanks.